Hey, hello everyone, welcome to 30 CAGR YouTube channel. Friends, in this video, I am going to talk a little bit about pyramiding concept. Generally, what happens is we all have a tendency to add more quantity when we are in losses, right? Because we think that the average price would come down, so it will be easy for us to recover. But no, today we are going to see a live example on how we actually have to use the pyramiding. But before that, in case if you haven't subscribed to this channel, do subscribe and hit on bell icon, because these kinds of important trading concepts will be discussed in this channel. Okay, all right, so I'm going to demonstrate that concept a little bit, but before that, first let's actually see what is the right way of adding more and more quantity. Okay, let's say you are option seller. Okay, you are selling an option at 100 rupees, and your stop loss is, let's say, 200. Okay, and 0 is your obvious target. Let's say it's 0 DTE trading. So on expiry day it goes to 0. If it comes down, obviously you will be in profit because you are an option seller, not option buyer. Now, so many people, what they do is, if it goes to, let's say, 150, that is when they start to add more quantity when they are in losses, because they want to bring the average price, okay, from 100 to it will become 125. So if market takes a U-turn, then they think that it's easy for them to get out of that position. Okay, but actually the right thing to do is, when market is in your side, okay, let us say it came to 50, that is when you have to add, okay, one quantity or two quantity, whatever amount you want, because market is saying that, it's supporting you basically, and it's giving you the money. It's a right time to take more money from the market. Okay, because the trend is on your side, right? So this is what I'm going to demonstrate in this video. And one more thing is, let's say you entered initially at 100, and when market came to 75, okay, you decided to add one more lot or one more quantity. You don't need to have the stop loss of this new additional quantity same as the original quantity. Let us say original quantity stop loss is 200. This original one need not be 200. Okay, you can just put this at 100 rupees. You sold at 75, and then you have a small stop loss of 100. And if market goes back, you can just exit this one quantity but still hold the other quantity. What this will do is, this will make sure that if market continues in your side, you will add more and more and more quantity. If market tries to take a quick U-turn, even for a short span, you will exit that with only less difference only, and the loss for this particular lot will be less only. In case if market really takes a U-turn and goes to 200 also, you won't get good major loss, because you are exiting your recent addition very quickly, right? So this is very important. And let's say you again added one more quantity at 50 rupees. Okay, one more quantity, because markets further fell going in your direction. For this also, just have 75 as the stop loss. Okay, so for the one you took at 75, you will have stop loss as 100. For the one that you took at 50, you will have stop loss as 100. For the one you took at 25, have the stop loss as 50. So like that, at every point it's like a checkpoint, or it's like a minor small stop loss that you are placing for the recently added quantity, right? So this one I'm going to demonstrate using a small strategy from stock mock. Initially what I've done is, just have taken bank nifty, no fancy strategy, just ATM. Let's say the ATM price is 100 rupees. It will be easy for calculation, and initial stop loss is 100%. Okay, and then when market is going in my direction, 25% downside, because I'm selling, right? If market is going in my direction, I will add one more quantity. Okay, and remember, the stop loss is not 25%, it is 33%. It's a basic math. If 100 to 75 is 25%, but 75 to 100 is not 25%, it's 33.33%, right? It's a basic math. Everybody who is in stock market basically knows this. And likewise from 75, let's say it's coming to 50 rupees. Again, I will add one more 50% in profit. Market is in, I mean, the stock is already in 50% profit. That's when I enter one more lot. And then the stop loss for this will be 50. Okay, because I entered at 50, I exited 75. 50 to 75 difference is only 25 points, right? And then let's say market fell 75%. I'm in a profit of 75%. Then I will add one more lot. Okay, basically from 100 rupees it came to 25 rupees now, right? But my stop loss is 25 to 50, and target is also 0. Obviously target is 0. So 25 entry is the 25, stop loss is 50. So 100 is the stop loss. Okay. Now, very simple. What we are doing is we are entering, and at every extra profit, okay, 25% profit, we are adding one more quantity, 50% profit, adding one more quantity, 75% profit, we are adding one more quantity. If you do like this, first probably let us add all the days, okay, and run the strategy. So I already ran the strategy, and you can see that first let's remove this. Okay, you can see that a normal strategy, our return to MDD or expectancy is 0.17 and 2.43, right? But if you add this, you can see that from 0.17 it almost doubled to 0.33. Expectancy is the key, it's like the heart. And even this also from 2 point something to it came to 4.17. Okay, so of course this is sell. If you add these things, you need extra margins and all that, but the point I'm trying to make here is you can apply this concept even for buying, and even in swing trading, for equity, whatever it is, even in investing also. Let us say you are investing something, it's going in your direction, it's going higher and higher and higher, you are in profits, add more quantity, because there is something that is making the stock to go upside, right? So you don't want to add more quantity when the knife is falling, right? You don't want to catch the falling knife. That's a saying in stock market. So all you have to do is when you are in profit, you can add more and more quantity, right? And now let's actually do this on 0 DTE. I think this is probably more useful for 0 DTE, but you can also put this concept anywhere in stock market. Okay, so you can see here, first let's remove these three. Normally 64% is the win rate, 3 is the return to MDD, and 0.76 is the expectancy. If I add, then expectancy is increasing, return to MDD has also increased almost by 50%. Win rate has massively come from, I think, 64% to 76%. Okay, so this is very, very important. This concept is very, very important for you to learn, especially if you are trading in options or equity. Okay, so that's one thing. And the second thing is execution. Also, you have to be very quick in terms of execution, especially in 0 DT. You know how fast the stocks move. So in that case, you also need to have some kind of execution tools. So in case if you wish, you already know, we have so many execution tools in our website, bluechipalgos.com, especially Trade Scalper. I always, say this. In case if, you are doing options trading, there are so many techniques like this, like pyramiding you can do. So many techniques, okay? Sometimes what happens is people enter less quantity, but keep on adding more and more quantity during the pyramiding. Some people, they enter more quantity, they still do pyramiding but with less quantity. So there are lots and lots of things that you can do, and this Trade Scalper helps you achieve all those things very, very easily. So for example, if you want to enter more quantity when markets are moving very fast, you can't go to broker's terminal and do that, right? But however, if you have this, you can see how fastly I can enter. Okay, see, I'm entering within like milliseconds. I'm entering all these, and if I want to exit, I can exit all that. So the point here is you need to have such kind of powerful execution tools. Okay, yeah, if anybody wants to avail these tools, where to contact. We put our WhatsApp number in the description, just message us. Anyway, so I really hope now you understood the importance of this pyramiding when you are in profits. And in case if anybody has any questions, you can put it in the comment section. And in case if you haven't subscribed to this channel yet, do subscribe and hit on bell icon. You are going to see a lot of these important concepts that will help you if you are a trader in stock market. Okay, otherwise, thank you so much for watching, and have a great day.